Hi guys, I hope you guys are good. Today we have a new jam that I want to share as always. So let's just jump into it. So remember in my previous videos I told you about the 8 p.m. to 00 hours GMT, which is the Asia range. Um, Today we're gonna be making a full live. It's not actually a full live stream, but it's like a full live analysis on how to build up a model with our 711 model. So firstly, one thing you need to do, you need to get to your fib extension, and you're gonna mark from the lowest low between 8 a.m. to 00 GMT to the highest high between 8 a.m. and 00 GMT, which is this low here, from this here to this high. Then you click again, then you drag it back to the original point, which is this one. And then here you find the second standard deviation. So what you need to do is just subscribe to our channel so we can be able to make live analysis. If we can just reach like at least 100 subscribers, so we can be able to make live analysis. And I'm going to be sharing the fib settings. I'm going to be sharing the extension settings. So if you could just click the subscribe button, we're going to be able to share more of these deviations that we're using to measure how far the price is likely to go as a manipulation. So in this high here, what do we have? We have this previous session high, which is this one here. Is the previous, it's yesterday's session high, the PM session, New York PM session, and we have this 15 minutes fair value gap above here. So this is gonna be our target for the Judas swing. As we took out this high here, we we have this new week opening gap, which was on the 27th, that was yesterday, and we have this second standard deviation here. So when we figured how far the price is likely to go with these measurements that we have here, with this previous session liquidity that's here, with this 15 minutes fair value gap that's above this previous session high, and alongside with this new day opening gap, you see now we have a plethora of ideas on how far is willing to go, how far is the price is willing to go from the actual consolidation of the Asia to that high. So we have these confluences that we have in one section that can give us a direction on how far the price is willing to go. So now in your mind that we have this liquidity here, we have this deviation here, we have this 15 minutes fair value gap, and also we have this January 27 new week opening gap. We're gonna go to a 1 minute time frame and see how we execute this model from this low here up to this far here, up to this high here. So let's just jump to our 1 minute time frame. Let me remove this thingy. Now we're gonna go to a 1 minute time frame. So now I'm gonna be highlighting on how to utilize our 711 model. So uh, first thing that you need to do is to mark out the 1 a.m. candle, because this is a London session execution. So we're gonna be looking for a 1 a.m. candle. Let me just drag back. We have a 1 a.m. candle here. Oh, I just passed it. Here's a 1 a.m. candle. And what we have a midnight opening, which is 00 right here. This is the midnight opening. I'm just gonna highlight it so we can remember. Midnight opening. There it is. So now once we've marked this 1 a.m. candle, what do we do? As you can check on our previous videos, we explain more about the 711 model. But basically, what we do after marking the 7 a.m. candle, we look for relative highs and relative lows after 7 a.m. So we have relative highs here, and we have relative lows here. I'm just gonna mark out this low. I'm just putting all the liquidity in one, so yeah, here it is. So we have this low here, this low here, this low here. It makes this the relative equal lows. We have this high here, this high here, this high here. Then it makes this the relative equal high. So now that the price have taken out the buy side, the price traded lower to the sell side. Where did it go? It went to this we call it the balance price range, which is a 1 minute balance price range. We have more of these lessons explaining what's the balance price range, but to not drag this video to be long, I'm not gonna say much about it. Balance price range. I'm not gonna say much about it, but if you could just subscribe, then we're gonna be able to make live executions, live analysis, So just tune into our channel so you can be able to make more of these gems. So now that we have this low has been taken out, the relative equal lows has been taken out, the relative equal highs have been taken out, and price went to this discount array here. We look for a true open. We look for a true open, which is right here. We explain more about the true open also. So I don't want to drag this video long. So in order for you guys to have a lot of details about what I'm actually doing, you can just subscribe. Then we're gonna talk more when we be able to go live. So this true open is being supported by this fair value gap here. This fair value gap has been converted to a balanced price range also. What's a balanced price range? Basically, is when a fair value gap, there's a down close fair value gap here, and then the price close the fair value gap immediately if there's a rebalance like this immediately. Because if the fair value gap is open, it's going to be an open gap. It's going to be a fair value gap that has a gap that needs to be covered. So now when the price traded lower and traded high again at the same time, this is becoming a balanced price range because now the fair value gap has been balanced. So that's why we call it the balanced price range. Sorry. So even here, we still have the same thing. The price created this BC, this CB, so setting balance by setting efficiency fair value gap, the price traded lower and then it traded higher at the same time. So once the price does this, it becomes a balanced price range also that we have here. So we're also gonna note it as a 1 minute balanced price range right here. So now that we've figured this much, and here we have the true open. So you see all these PD arrays that I'm highlighting, they are very important, and it's basically what we use to teach people how to trade. These are the things that we teach people on how to find good setup and find good entries and exits. So now that we've figured this much, this now the price that is taken out the relative equal lows, this is gonna be our first entry that we can take from here up to the second standard deviation, which is when we measure using a fib. From this low here, this is the lowest low, and this is the highest high. Why am I choosing this? Oh, sorry, I made a mistake here. So why am I choosing this range here? Why am I choosing this high and this low? I'm choosing it because this high is responsible for taking out the buy side for 7, and this low is responsible for taking out the sell side between the relative equal highs that appears on 7 high and 7 low. So this range here, now that you drag out this port liquidity here, is the one we're going to use to find our second standard deviation, which is going to be our target for the day. So now we figured here's a second standard deviation here. Here's a second standard deviation. And remember our 15 minutes analysis, what do we have? We have this buy side here, and we have this new day opening gap, new week opening gap that's here. This new week opening gap that's here. And we have this 15 minutes fair value gap here. And we have our second standard deviation using our fib extension. So now that we got this deviation, I'm just gonna let me mark it and so I can remove the Fibonacci. So now I'm gonna just remove this fib. I'm gonna remove this fib. So now that we've got this is gonna be your first entry, and this below the true open, a fair value gap that's below the true open, which in this case is this one, is responsible for a buy side entry. Because if the fair value gap true open, you treat like a what can I say, a fair value gap. If the price is on a premium, that means you have to sell on a discount, you need to sell cheaper to go higher. So in this case, they have a true open here, here's a true open here, and we have a discount array, which is this fair value gap here. So now we need to buy on a discount to a premium array, which is this new day opening gap above here. So this can be your first entry, and this can be your second entry. And now to find the last entry of the session, of the London session, you just measure from this low here to this high here. Why am I doing that? Because we have a consolidation here. We have this consolidation here that took place between 3 a.m. 2:30 to 3 a.m. As you all know, the 3 a.m. is for the silver bullet, which the silver bullet, before the price distributed an actual silver bullet, the price has to run to to an efficient to a liquidity before it can deliver the actual silver bullet of the London session. I'm gonna make another lesson for how to trade a silver bullet, but for now I'm just gonna take it from here. So now that we have this buy side here and this sell side, this sell side delivery here, it became more valuable because it traded to the London True Open and it traded to this balance price range here. And so now that we have this range from here to here, we look for a 50%, which is here. Here's a 50% for this range. And now we have this candle trading to this 50%. Now we have this entry, this will be your third entry. This particular entry here, we call it an optimum trade entry. It's an optimal trade entry. Let me just highlight it here. This is an OTE entry. So now that we have this OTE entry, because the price is traded to this 50% here. So now your initial target is right here on this new day opening gap and on this previous session high. So now if you can understand how to find buyers like this can help you to find consistency, can help you to find a game plan on how to trade, specific time on when to trade, how to execute, and when to execute. So if you can see this level that I've marked, they're as precise as they can be. They cannot be precise than this because if you know how to trade using a midnight open, you know that you're supposed to buy below a midnight open if you're going long. If you're selling, you're supposed to sell above the midnight open. So in this case, we have a favorable gap which is below the midnight open. So the price traded into it, and now we're buying below the dips to the premium array. So I hope you guys find this insightful. If you could just subscribe to my channel so we can be able to do more of these executions, do live executions, do live teachings and trade walkthroughs so we can be able to find consistency in your trading. Just hit the subscribe button and like our videos. We still have more videos that we did post here where we have live executions, where we have more lessons on how to trade more, such models and how to find the Judas swing, how to trade the Judas swing, and how to how to trade the delivery of the day. So I hope you find this insightful. Till we talk again in our next videos. Cheers.